Happy Friday, everyone. In today's video, I'd like to do a follow-up on yesterday's nightly trending list video. In yesterday's video, we put out 4 stock candidates that we thought were likely to trend today. We're going to revisit all 4 of those candidates to measure what really happened. Were any of our triggers met? And if so, what were the results of that particular trade? Now, before we do that, I'd like to revisit this volatility chart just one more time. This is where we've been tracking the stock volatility box trades. On Monday, again, we saw instead of 40 from last week, we saw 63. Tuesday, we saw that volatility increased 102 compared to 56 last week. Then we saw 100 compared to 74, 102 compared to 82, all of which were signs to expect more volatility today than usual. Now, the number to beat compared to last week was 157, but today we only saw 130 that met that criteria. Now, this is stocks that, again, were on our live scanner for 3+ minutes, along with we're looking up till 10 a.m. Pacific, after which we really just shut down since it's a Friday. Now, if you ignore that 10 a.m. Pacific rule, then this trade count jumps up from 130 to something more like 384. So a lot more trades that ended up triggering, and exactly what we thought should happen just happened more towards the latter half of the day, in which we saw a lot of stock volatility box entries at some point in which the live scanner really just looked like a complete list of just a lot of stocks. So in today's video, let's revisit the 4 trending candidates and pay particularly close attention to those 4 to really bring the closed loop circle here and measure the efficiency of this setup. Now, starting with the chart of CCEP, for those of you that like the concrete price levels, again, you can revisit yesterday's video. Right around that 3-minute and 54-second mark, you can get a measure of what these concrete levels were for the 4 stocks we'll look at, but we're going to go ahead and use the actual charts. Now, in Coca-Cola, the European partners, we were looking for a break above the edge of our clouds in the first 15 minutes. In the case of Coke, we ended up getting that breach. Not only did we get that breach, this triggered us into our buy stop order. This is one of those trades which you could fully automate this setup. But really, this was about the best picture perfect setup that I think you could get from a trending list candidate. We had it breach our volatility box. You had a fairly concrete pivot point below which you should have the stop. Yesterday, we were looking at these two. In the morning, we opened just a tad bit lower, but still ended up making our rules where we breached this before 6:45 a.m. Pacific, right? Just to give you an idea of where this breach actually happened, that was 6:39 a.m. Pacific. And from the point that we were looking at our entry, so really this is our buy stop entry into this trade looking for a bullish move, we ended up making a move all the way up to not only our bullish target line, but also the edge of our clouds. And this is where we'd be normally looking at a short entry. So to give you an idea of percentage wise, that's a 2% move in Coke or Coca-Cola European Partners and a 1.58% move to the first target. Now, after we slammed into this volatility box, that then triggers you into a short trade, which ended up making this just really about the most wholesome circle trade that you could potentially have. We had a bullish entry to try and play a move into our volatility box. Once we slammed into the volatility box, that was then our sign to look at a potential short. We're looking for a bearish edge signal once we breach the volatility box clouds, which we got right here. That was then our opportunity to enter at the clouds or better, still before that 10 a.m. Pacific mark, before which we're really looking to shut this down, and that still ended up hitting the actual target. And so in the case of CCEP here as a ticker, you had the ability to play not only this trending candidate move into the volatility box, but also play the move away from the volatility box. And I thought that was kind of cool. We don't see that too often, but something definitely worthy of calling out. Now, the next stock we'll take a look at, CGC. In the case of CGC, we were looking for a bearish break below the edge of our clouds, again in the first 15 minutes. Very similar to CCEP, we saw that we opened just a little bit above, and then we continued to make that bearish bet. And once we triggered this, that was really the entry in the trade. It's a stop entry, and so this is where you're looking alongside momentum to enter this trade. And that's where once we had our entry in CGC, if you take a look to see how CGC performed for the rest of the day from that point, it made a move of right around 4%. And that's, again, if you held it through the end of the day, perfect close sort of entry. The bare minimum risk that I think you would have given this, again, looking for a nice pivot point outside of the beginning of the clouds, would have been this point yesterday. But with our open today, we had the luxury of having a better pivot point, a price that we would expect to be respected today. Otherwise, we're proven wrong. That was risking right around 39 cents in CGC. So that was a fairly nice trade, also triggered as well. So far, 2 for 2 in terms of the nightly trending list candidates that triggered. The next one we had was HFC. Now, HFC was a trade which triggered, but also stopped out. And so this is also one that I think is worthy of talking about, in which we had our breach again in the first 15 minutes, but once we had the breach, that was really it. We had about the worst potential entry in HFC for the day potential in terms of a short, and we were quickly stopped out once again, looking for a natural pivot point. In the case of HFC, this was the smarter pivot point, in my opinion, as opposed to this pivot point, giving it that little bit of extra room, which was still taken off in this move up. And so HFC was a stop, and this was just a trade that never really went our way. So far, 2 for 3. The last trade that we had that we were looking at was MSI. Now, in the case of MSI, we were looking again for a bullish break, and we did get that. We, in fact, ended up gapping up higher on MSI, and we did also fill that gap in MSI. So no real trade here that triggered. Off of our aggressive volatility box, we were looking for a potential long here, ended up breaking outside of the clouds. And if I load in our conservative volatility box here, even off of the conservative, just so you're aware, we had the edge signal. We ended up hitting the target right here, but we ended up hitting the target after we had already printed the edge signal. So no trade in MSI. So with yesterday's trending list candidates, we went 2 for 3 with HFC being a loser, CGC being a winner, and CCEP being the nicest winner possible. Now, one last trade that I'll talk about, or I'll leave you with at least, just because this is something we've been talking about for the past few Fridays now, and I find it to be a very fascinating concept. And it's the idea of using the zero date to expiration options to try and play a move in some of these either richer stocks or just things like a short entry, for example, where you don't necessarily care to short the actual stock that requires a lot of capital, but instead being able to use the 0 days to expiration option either as a vertical or just the out of the money option starts to become a really powerful way to skew the risk reward in your favor if you have a reasonable setup which gives you a level of confidence. Now, Facebook was one which again hit our live scanner today, met our rules, a $268 stock, and this is one in which I was able to participate with the actual put. So now there's some statistics here that I think are fairly interesting. So it's once we had our breach of the volatility box, got the edge signal, I was waiting for an entry again at the clouds or better. We had this entry come really with price action slamming into the volatility box, and the 270 puts are the ones I ended up going with. The 270 puts mostly because the 275s at the time were trading at the money, and the 270s were the ones that were out of the money in Facebook. So now this was by far an out of the money trade. The 270 puts, if we take a look in the trade tab here, this is a 0 days to expiration option. This is trading for 40 cents when price action slammed into our clouds. And towards the end of the day here, that's like sort of your best potential scenario when we hit the other side's target line, really the best potential trade that you could have had where you had a short entry on our short clouds. You ended up making a move towards what would have been your target at the great target line, that stretch target. And at this point right here, that put that you bought for 40 cents or 40 bucks really was trading for close to 200 bucks for $2. And so that's a nice 5x return on that actual capital. But the part that I find that's more appealing about this particular trade is the fact that if you just looked at this as normal risk that you'd be taking anyway, so you're thinking about it in terms of $40 per really 100 shares, you recognize that you're trading something that's out of the money. So this is a much higher risk trade compared to something like shares. But say you weren't really willing to be short Facebook, but you thought this was a compelling trade in which you'd like to see whether or not this turns out to be a really nice lottery ticket. Think of it as a butterfly, but with much, much higher probabilities. That's where this starts to become really interesting, right? That's where your $40 turns into basically $200 off of what was a fairly low risk setup, right? If your worst case scenario here was losing the 40 bucks, so you can scale in based off of whatever your risk would have been with the actual shares, trading this with, your entry at the beginning of the clouds, your stop outside of the clouds, what is that in dollars based off of the number of shares you'd be trading? And then you scale that into $40 chunks to then play these 0 days to expiration contract moves. Only really works on Fridays, but on Fridays I found this to be just a really nice trade. Another way to play this for those of you that want a theta positive position is to launch a spread. So now don't particularly care for this just because weird things tend to happen with call credit spreads, but that's where you had the ability to launch a call credit spread that again expires today, where as soon as price action starts to go in your favor, it's slightly an in the money credit spread where the risk to reward is skewed in your favor, you have a better way of profiting. Now, again, when you're comparing to an option that costs 40 cents, I think that's where the 40 cents starts to become a compelling offer as well in terms of buying this out of the money premium. So that's just one trade I'll talk about. We'll also spend some more time looking at other trades, but Facebook was one that I thought was particularly interesting. Also had a nice confluence of that 1618 zone, right? Using our daily swing from our swing high to our swing low from the beginning to the end of this March decline. We saw that we really slammed into that 1618. That 1618 overlapped really nicely with the volatility box clouds. That was where this ended up just having too many things going for it, where a 40-cent risk just it makes too much sense to not take. So anyways, that's the trade I'll leave you with. Hope you all had a wonderful week trading. We'll see you in the next update. Take care, everyone, and hope you all have a wonderful weekend ahead.